I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to talk about the June distributions from YieldMax. I invest in TSLY, NVDY, and AMZY. Definitely made some changes since the last video. I got rid of my QDTE position and wanted to switch over to the YieldMax holdings. So, on this channel, we borrow money. And borrowing money, we invest in funds that pay over 40%. The funds that I'm invested in is AMZY, which distributes 52% a year. NVDY, which last distribution was 106% on a yearly basis. And then the final one is TSLY, which distributes 42 or 52% a year. So overall, my income for the month has been $3,200. So let's just go to the history, and you'll see that when we go to dividends, you'll see the three different payments. The AMZY position paid me $851. The Tesla position paid me $700, and the NVDY or the NVIDIA strategy paid me $1,739. So for $60,000 worth of assets or income, we made $3,200 this month. And then if you annualize that over a year, that is over $30,000+. So that's pretty solid. So just kind of going over the portfolio here. So yeah, I mentioned this in all my other videos, but usually what I like to do is I like to have a good base of foundational holdings that you can borrow money against. So I'm borrowing $60,000 against this $149,000 portfolio. And those two main foundational holdings are the Tesla and SPY. Each one of these income positions, I put $20,000. So let's just take a quick look here. So the AMZY, you can see my overall position down $597, but 25% margin maintenance, which allows you to borrow more money. And then you can see here that the payment was $851. So, between the three holdings, I really like all three of them because I feel that these three companies are going to be the dominant companies going on in the future. Amazon, we love our packages every single day. NVIDIA is making the GPU capacity for all this AI technology. And same thing with NVDY, 25% margin. You can see that the payment is going to be $1,739. TSLY, I believe that they're going to be the future of transportation and energy and things like that. So again, 25% margin maintenance and $700 when it comes to the payment. So for not really doing anything, that's a pretty good deal. $60,000 turned into $3,200. Real estate can't even pay you that much money. And then since my last video, I made some changes to my spreadsheet here. So we'll just talk about a couple things here. So if you so this is my prior to expenses, taxes, and reinvestment. This is the monthly yield off of the price paid. So my monthly yield is 4.7%, which comes out to 57% a year. And if you annualize these last payments, it would come out to about $39,000 a year. My margin maintenance is $54,597.24. So if we just go to our investing tab here, you can see the amount of margin that I have, and then the margin maintenance 58,360. You can see here the price paid. So I add all my things up, and then the market value. So overall, we're still down. Now, I will say a little caveat here is technically in this TSLY position, I've only really used $20,000 of my own money. So realistically, if I use that exact same type of mentality, like $20,000 each, my actual cost basis is $60,000, and everything else above that is the reinvestment, which would be all that money that I'm getting paid from the dividends and putting it back in there. So technically, my actual price paid is $60,000. So then my loss would actually be like closer to $5,000. But I still want to get the price. Like I like to use the price paid because it's going to be reflecting more accurate cost basis. Market value. So yeah, market value of all the funds. You just go in here, just click on whatever this is, and then just throw it on that spreadsheet. And then you can see here, I added all these things together. So if you wanted to do some quick maths, you can see that got paid $3,291.21. I'm going to leave that there because then it's going to show up on this thing over here. Cost. Be this $301, taxes And again, too, this is return of capital, and for the most part, the last time I did taxes, 80% of the income here was return of capital, and the other was short-term capital gains. So I am just setting aside the money for taxes. Once tax season hits and I don't owe all that money for taxes, then I will go ahead and just reinvest that in my 50-50 split between putting it in SPY and then back into the income holdings. So these are just kind of the numbers here. When it comes here, let's finish the top portion, then we'll get down to the bottom. Okay. That's going to throw the numbers. Let's do this first. Okay. Okay, you can see here my 3 holdings got paid June 7th. Price paid, market value, income for each one, expenses, taxes. Again, just like I said, putting money aside for taxes. If not used, I will reinvest back in. And this is my base reinvestment, because there will be a point where I might have $500,000 out if my entire portfolio is worth $1 million, and I would want to start using some money. So 25% reinvestment between SPY and then income funds is enough for the account to keep growing, but then I can also enjoy spending money, and that's where the net gain would come in. So for example, if I had that $500,000, this is what I'd be left with. So then technically under that same mentality, I could take this $1,179 and do whatever I want with. I will say I change my mind quite often with a lot of things. Like I consult my brother all the time, who's doing very similar strategies, and kind of go back and forth like what to do with the money. But I think we've come to the conclusion that the faster you can keep reinvesting the money, the faster you can build your income, and then you can divest and spend it on whatever you want. So you want to get to the goal first and then kind of divest it and pay down the margin and stuff like that. So that's kind of where we're at. So this money is going to be reinvested into the portfolios. So I'm going to pop these off because that's going to ruin my numbers. But overall, if we're going to go off the price paid, we're still down 13K, and that's because my Tesla position has really been dragging the entire portfolio down, but it will recover. Total income, so I've been doing this for about 12 months now, since July 7, 2023, so we're about to hit the full 1 year mark. So we got paid out about $10,757. The 60K position has been this last month, so if I had that since July, I would have a lot more income, but I was focused on doing it safely, and I'm getting more and more comfortable with how like the margin maintenance works and the 25% margin maintenance, things like that. So I'm more confident with how my portfolio would respond to downturns and things like that. So, but this is for the last 12 or about 12 months. Then see your total expenses. So this is the margin interest plus the Robinhood Gold. This is my current account value. This is how much I have set aside in taxes. So after, I'm going to show you all the money where I'm divesting it, but then I should be left with $2,375 in there. And then I added a little bit for the interest in there. So it'll really be like $2,725 just sitting in this account here. And then the base reinvestment. So this is the amount of money that I'm reinvesting. And then a new recent thing that I'm going to be instituting is that half of this will be going into SPY and the other half will be going into the income funds. So yeah, so this reinvestment here, $400, $500, $600, $700, $800, like half of it will be going into the S&P 500. The other half will be going between AMZY, TSLY, and NVDY. Moving along, the net gain, it's the amount of money that I have, so I could do whatever I want. So technically I would have $3,600. So it's what, an extra $300 a month to do whatever I want. Kind of cool. So, but we're going to be reinvesting this money as fast as possible, so that ultimately with that money reinvested, it's going to create more of a buffer. So you'll actually have assets and holding versus margin. So like every single month that I buy more SPY or NVDY or AMZY or TSLY, it's going to actually build a position in the portfolio that will push the margin maintenance line further and further. Okay, so that's pretty much all the numbers up there. So technically with the amount of reinvestments and the leftover money, I can actually put $1,362.71. So I'm going to be buying that much SPY when the market opens on Monday. So if I order, so we're going to buy this. So that is done. And then we're going to purchase the NVDY, AMZY. And then so that is divide 1362 by 3. So that's $454. And then we're going to buy that. And then this is how the compounding machine works. You get more shares, they give you more money, it gets you more shares, and it's a beautiful sight. All right, and then one last one is the TSLY, so $454. And then let's just discuss the margin maintenance here. So one of my favorite tabs here is margin maintenance here. Okay, so for using $60,000, my margin maintenance is $58,360. Pretty safe amount. So if my portfolio went down to about $60,000, then I would be margin called. But my portfolio value is $149,000, and anything can happen. You could have another black swan event, but I have a 60%. A buffer, so I have $90,000 buffer before I possibly get margin call. So we're at a pretty safe amount. And again, every single dollar that I reinvest back at the SPY or the AMZY, it's going to keep building a bigger and bigger buffer. Besides that, those are all the numbers when it comes to using margin, borrowing money to make a side stream of income. A payment this month was substantial, is $3,200. I don't expect it to be $3,200 every single month. NVDY was carrying this payment, but I'm looking more towards each holding paying about $700 in a realistic manner. So really that would be $2,100 with a $300 expense. So that's still pretty good income. Besides that, I hope you all have a great day. Don't forget to like and subscribe, and y'all keep making that money.